All right, we welcome everyone on this Tuesday morning, February 11th. Quick reminder, this is Valentine's Day week. Worked on my present last night. Feel pretty good about it. So anyway, that's a really important, the very important investment there with your spouse. All right, a little fun there. I'd like to welcome everyone to Growth and Value Stocks. My name is James Boyd. Normally teach at this time. This is live, but it's also being recorded. And I'll show you where that recording is posted. That way you can actually see it and follow along. Now, just real quick, when we talk about growth and value stocks, we know that all investing is not the same. Some companies are kind of newer, or they're kind of in that growth phase where they're growing the revenue, earnings per share. They don't maybe pay as much in terms of dividends. Some of the companies, they're kind of more like monopolies, and they can actually trade with fairly decent price multiples, maybe also pay dividends as well. So that's one thing we really need to understand, that not everything is the same in terms of investing. And we're going to show a couple of examples of that when we look at stocks from a technical and a fundamental standpoint. Now, remember that Connie Hill is in the chat. You'll see her initials as CH. She's a fellow instructor, so if you have questions, go ahead and ask questions. I'll look for those questions, and Connie will as well. Now, you can find Connie or myself on X. There's my handle. Connie will post her handle in the chat. That way you can follow her as well. Now, quick reminder that with what we discussed, the information is provided for general informational purposes only. When we talk about examples, Schwab does not recommend the use of technical analysis as a sole means of research. This is very important because sometimes prices just go down because people are selling, but that doesn't necessarily reflect what actually the fundamentals of the company are or the position. Also understand that when we talk about examples, we will do those on the Paper Money software application. There is risk with dividend-paying stocks. They may reduce or stop paying dividends. They could also increase them, okay? And so just know that it can vary. Also understand that when we talk about investing involves risk, including loss of principal, and when we also talk about stop orders, we'll talk about that here today as far as what that risk is and maybe versus different other ways to exit as well. Now, when we talk about these growth, value, income styles, let's kind of just hit this real quick. When we talk about growth, okay, we're looking for capital appreciation. Clearly price, clearly actually that's going to come in the form of the technical analysis, the price itself, maybe and the volume. But also the biggest actually thing is it's also in the fundamentals. When we say fundamentals, we're saying income statement, balance sheet, all the type of stuff that you want to know if someone says, I want to be a millionaire, right? You don't get to be a millionaire without actually having a balance sheet. If we actually take a look at value investing, we're looking for low price levels in comparison to valuation parameters like sales, book, earnings, dividend yields, and so on. And when we actually talk about, let's say, income investing, the biggest actually thing is, do they pay dividends, and are those dividends increasing over time with their sales? Now, we're going to talk a little bit about all of these here today, and I'm going to kind of show you some examples. As we do this, let's first start off with by taking a look at the market. Okay, what kind of stands out here today? Well, so when we actually talk about looking at markets, we like to look at, we call it prices, okay? And I want to just kind of make mention, we talked about this yesterday, looking for, could silver start to go back to the upside? Okay. Now, why do we do this? We do this quickly because we want to know where the example is probably going to come from. The difference we actually see in today's silver is actually that the moving averages are trying to cross. Hasn't made a higher high yet, but the moving averages are starting to cross. One of the also the things when we actually, so silver is still lagging gold. When we actually take a look at, let's say, gold itself, moving average crossover. Now, we might be saying, well, what does this have to do with stocks? The answer, everything, okay, everything. Because if these prices are going up, it's being reflected in the balance sheets, the income statements of the business, which is publicly traded, okay? So we're going to come to some of these examples. We talked about one yesterday, but let's go back to that. The other area that I want to kind of pull up just real quick is that commodities in the terms of crude oil. Now, yesterday we talked about, can discretionaries go back to the upside? And commodities, are they starting to kind of get a little mojo? And if you look at crude oil here today, we did actually see that actually push back to the upside. Obviously, if we're talking about these two sectors, energy sector, okay? Wow, this was just yesterday, right? Just talked about this yesterday. Don't say we didn't talk about it. We talked about energy, right? And when you take a look at, let's say, base materials, brand new high on both. One thing that we're kind of seeing is it's hard to replicate commodities. You can't just say, oh, I came up with AI and AI made, for example, new commodities. That's kind of why people like them. Physical assets. It's not easy to replicate, okay? And also the scale. So that's probably the biggest thing I want to kind of say right off the bat is that bullish movement in oil, gold, stronger than silver. Keep an eye on the gold. Can it actually break to new high? Many investors are probably going to be looking at their precious metal watch list. And let's kind of talk about what's kind of the S&P for just real quick. If I look at the SPX, now you got to remember the SPX, it's not all equally weighted in terms of sectors. Okay, this is like when you go to college or school, your final exam matters more than your attendance. Your pop quiz, it does not matter as much as your midterm exam. It's the same idea, okay? Now, if we look at the SPX, it's just kind of been chopping around the right-hand side, and it hasn't broken out. Now, if we actually lay flat all those different sectors, SPX, EW, you're now going to notice in this case that there has been some push if we said, look, all of these sectors are equally weighted. Now, by the way, that begs the question, which ones are represent a high percentage? Technology is the number one sector in the S&P 500. It's almost a quarter of the S&P 500. Now, second would be discretionaries. Those two are over, 37, 38% of the whole S&P 500. Two sectors by themselves. Now, remember what we actually said yesterday. When you look at, let's say, the utilities, that has been an area. Now, some people might look in terms of this area, utility sector, as far as an area of value or income. Now, when we also talk about other areas, keep an eye, for example, on the $ IXRE, which is real estate. Think of that. You could think of that as also maybe, let's say, value and or income. When we take a look at a 3-year weekly chart, this is one that might be trying to come out of that basing pattern. What stocks in that area you're watching. Now, the one other area that I want to make mention of just really quick, when we take a look at, let's say, staples, and we said, my gosh, we kind of feel bad for the people that don't look at some of these value income areas because they have actually had a pretty good explosion. Barbara Armstrong yesterday talked about flags. And what you're now going to notice in the consumer staple area, there's been some pretty strong flags there. Now, let's go back to just real quick, like the NASDAQ. The NASDAQ, we actually know, has been fighting its way sideways, okay? The semiconductors, the SOX, that almost made a brand new high here today. The problem is when we look at the SOX, we're looking at the semiconductors. This is not software and so on and hardware. When we go to the Market Watch quotes, you could actually, Market Watch and then visualize, you could see that really in the software pack, okay, Microsoft, Oracle, CRM, Salesforce, App, Intuit, these software-related companies have literally been the anchor off the back of the boat, meaning they've been really pushed down to some fresh new lows. Very ugly price action in this software space. I mean, where would the S&P 500 be if software wasn't selling off so aggressively? Okay? Now, so that's kind of first what I want to kind of say. Now, however, you'll kind of notice that there has been some things that have, as growth has slowed in some areas or been doubted, other areas have actually gone up like value and income. Now, what I want to do here just real quick is when I pull up the last one real quick before we look at an example, the Dow Jones, if you look at that, that was a brand new high as of yesterday. And what you're now going to notice on that Dow Jones, with that brand new high being yesterday, there's probably something that's maybe been going up. Okay, now I want to start here. Okay, now on the left-hand side, let's just kind of all be on the same page. Now, I'm going to go down a little bit on the left-hand side, and I'm just going to go bring up this list right here. Now, if you say, James, I don't have that on my left-hand side. Well, you're going to see these 3 lines right there, 3 lines. Let's go to Switch Gadget. And if I switch gadget, how did you get that? Well, we're just going to name it a watch list. Okay, so that's all we did. So that's all you're going to do. Click 3 lines, go down to Switch Gadget, and then click Watch List. When you click on the watch list, we're going to click on that drop down that is right here. And we're going to go to Public, okay? And then just Dow Jones Average, Industrial Average. There you go. Now, once we do that, we all got the same list. Now, I know you've been watching Caterpillar. Meow. Okay, that's a little joke we've been running. Okay, now I want to go to this one just real quick. Apple. Now, if we take a look at Apple, I want you to kind of notice when you look at Apple, it shows that we're in trend number 4. Now, trend number 4 means we're above both moving averages, but the price might be up near an area of resistance. Now, you could actually say that trend number 4 sometimes can really act like a flag, a consolidation. So if we look over the last couple of days, what you're going to notice is there has been some consolidation over the last 4 days. Now, what we've been really pushing over the last couple of days is really the concept of what does it mean to bounce? Or when people say, well, I'm looking for a pullback, okay? Well, remember, if you're looking for a pullback, if you're saying I'm looking for a pullback where there is a pre-existing trend, second, I'm looking for a pullback where maybe that pullback might be only 3 red candles or less, followed by a green candle. Well, this morning, we're actually getting a little push on that price of the recent red candles that are going to be what we call low days. Which of those candles were lower? It's going to be the 2-9 day or February 9th that was the lowest red candle. That's where we're actually getting that dot there. Now, when we look at, let's say, companies like Apple, okay, we got to think about if we look at, let's say, analyze and go to fundamentals, pull this up for just a moment. Now, I cannot stress enough, when you look at a company, it's probably not a great idea that if the company only has one product. Because if a competitor actually comes out and duplicates, they copy what that product is, well, they eat into the sales, okay? Now, you're going to, obviously, they do a lot of different things. But if we look at these numbers on the bottom, we're just going to see the price compared to a certain fundamental metric. Like earnings, dividends, book value, cash flow, free cash flow, very important. All suppliers of capital, debt and equity holders, and sales. Now, obviously, what you'd like to see over time is that these numbers are increasing over time. They're also, you'd like to see that sales per share, sales being revenue, you like to see that increasing over time. It's not just having a diversified portfolio of products and services. It's also that, for example, those products and services, those margins over time are holding or increasing over time. And also that they might have some new products to drive future or current sales. It all starts with sales. How much money do you make, right? It all starts from there. Now, if we take a look at this, we're going to go back to, let's say, right-click on this chart. Let's bring it up to the paper money account. How do you really learn how to invest? You paper trade a lot, okay? You actually got to go out and practice. Now, what I'm going to do is in that margin account, we're going to right-click on the chart, okay? Now, all we did is just right-click on the chart. When you right-click on the chart, it brings up a menu. Well, do you want to buy it? Now, let's just do this right now, okay? If I click on buy, it's just going to buy, just buy only. No target, no stop. If we go down to buy custom, we're going to go say with an OCO bracket. We're going to buy it, set a target and a stop, or do you want to buy it and just have a stop only? Now, for our example, what we're going to do is we're going to put on buy custom with OCO bracket. So we're going to buy it, have a target, and a stop. Now, if I do that, now what you're going to see is the one line that is in green, that's the buy order. In red, as you can imagine, the sell order. Now, I'm going to kind of close that left side down right there. Just kind of move that over so we can get a full page to work with. And now what I'm going to see in this case, stock buy plus 100. We do not have to buy 100. For some of you are saying, James, I want to learn, but I'm scared. Let's just go 20 shares, okay? Well, if we do 20 shares, right above that, you're going to see there's a little red icon. It's going to match the other. And now it's going to give us 20 all the way down. We just hit that right above that, click that, and that's what it did. Now, if I were to put a target, I'm just going to throw out the example of 288, even though that's not the target that we're going to look at, but I'll just point that out so you can see it on the chart. But if we looked and said, hey, where might the investor set a stop? Well, it's underneath the Cajole day. The third day in the row, we've been talking about this idea of when we get a Cajole day, we're going to use the open price of the Cajole day, the bounce day, and we're going to set the stop below there. Now, if we did that, 274.52 less 2%, it's going to give us 269.02. Okay, so if I type that in, day to GTC, meaning the order is not going to cancel at the end of the day. It's going to stay on there for up to 6 months. If I click on GTC, day to GTC, there it is. And now what it's going to try to go out and do, now notice what's happened as we've talked about it, the price has gone up a little bit. The problem is our order is at 279.49. Let's send this anyway. And I just kind of want to show you what's going to happen on the chart. You're also now going to notice that in this case, we can move up the orders on the chart on a stop trade. Now, remember how the stop works. If the stock goes to that price or less, okay, if the price goes to that price, it triggers a sell at that price or less. That's not saying it's locking in the loss at 269. It's a trigger to sell. Send the order. Now, what we can see on this chart is we can see the orders right on the chart. Now, what I'm going to do is, if we take a quick peek at this, we have the target, we have the stop, we have the target, we have the stop, and you can see that as you just put your cursor on there, and there's the limit order, okay? Now, if I take a look and say, hey, it has not filled yet, could I click on that green bubble right there and move it up just a smidge? Yeah, do not click on the X, it will cancel the order, okay? I'm going to left click, drag it up, let go, and it's saying, are you okay with the moving up the price of this area? Price-wise, if it is, we'll go ahead and say send, and now it's sitting right there. Where's the order? 279.84. It fits, okay? Just want to kind of show you some of that functionality there. Now, the biggest actually thing is, now the comment is this appears to be all about trading. Not necessarily so. We just did one example so far, right? One example does not mean all. When we talked about top-down analysis, we want to know where are those investments likely going to come, right? Now, let's talk about this second example. So if someone had an outlook that maybe commodities were maybe going to be a place to be per se, and they thought that trend could go up for the next days, weeks, months, quarters, and they said, look, I want to kind of more invest, not kind of, for example, see trading functionality. Now, the biggest actually thing is we show both. Now, what I'm going to do is let's go to just real quick this scan for just a moment, okay? So not everyone might be comfortable with, let's say, I have a list. Let's work, just get a quick list, scan, and what I'm going to do is once we go to scan, we're now going to, now the goal here is we want to kind of create, in this case, a precious metal list. Now, when we go to scan, what you're now going to see, if I go right below that, you're going to see where it says scan in. And if we go to scan in, we can kind of pick where we want to scan. Think scan as search, okay? If I go right down to where it says by industry, in other words, we can pick a certain sector that we want to see. I'm going to go down to the materials, and we're going to go over to, let's say, where it says metals and mining, okay? Now, what this is doing is it's picking anything in the sector of materials in the industry group of metals and mining. Now, you're going to also notice up top, the only thing that we said price-wise is we're looking for a stock that's over 40 and volume over 250,000 right now. So what we're trying to do is create a watch list. It's hard to invest in something you don't have a watch list of. Now, select all metals and mining. Now, what I'm going to do is once we did that, it's going to show right there. And let's just click right on the scan, the green button on the right-hand side. Now, if I click on that, we get 21 stocks that come back, okay? So what it's done is it's ripped out all the stocks that are over 40 bucks, that have over 250,000 shares traded so far today, and these are the 21 stocks that come back, okay? Now, let's put them in a list. What I'm now going to do is click on that little 3 lines right there. Let's save it as a watch list. All right. So if we do that, save it as a watch list. Let's just label this as Feb 11th precious metals. Now, our goal from this is to really find examples of investments. Which stocks really actually have a trend, some fundamentals that might cause the stock to go up over time. Now, if I'm going to click on that save, now where does it go? Well, we're going to go to where it says Market Watch. You're watching the market, okay? I'm going to go to quotes. Now, quotes is where that list is going to be. Now, if I go to, let's say, Market Watch, and I click on that drop down right there, we're now going to go to the personal list, and we're just going to look and see where it says February 11th precious metals. That's what we called it, okay? So now we have a list in 2 minutes or less. Now, if you take a look at this, let's kind of look at some of these. Now, I don't know how you like to do it, but if you ask me, I like to look at higher price dollar stocks first. That does tell us something about market cap, okay? Now, you're going to notice that on this account, this Papermind account, I don't have any column headings that we typically like, okay? So if I kind of took these same stocks and said, hey, let's bring up a precious metal list, but let's actually have some columns where we can kind of scan the trend, the momentum, the relative strength, bounces, breakouts, crossovers, all of it. What are some features? Well, if I did this again and said, look, just give me the highest price dollar stocks first. Well, one of those stocks is really STLD. Let's take a look at some of these. Now, I got STLD, SCCO, NUE, and MT. Now, if I pulled up STLD and said, what does this look like, STLD, you're going to see that that has been in a pretty strong upward trend. It has a brand new bounce set up here today. If I looked at the second stock in Southern Copper, you're going to see that this one has kind of had like an upward trend, and it also has, in this case, kind of some consolidation. Now, some investors, they might like stocks that are kind of in a price pattern, consolidation, where maybe the breakout has not happened yet. In other words, if I went back to STLD, someone might say, yeah, it's already made its move, it can't go any higher. Well, that's not true. But when I show that example, people might say, well, it's got up too much, I want something closer to the floor. Okay. Now, what I'm going to do in this case is, let's say the investor says, look, James, I want to look at, let's say, a stock like Southern Copper. Let's take a look at kind of some of the things we're seeing here. Now, if I go to analyze and say fundamentals, now remember, it says Southern Soap Corporation. No, it doesn't. Copper. And this is what's a little surprising to me, okay? So if you were, let's say, the CEO, CFO of the company, or you were the employee of a copper company, and you were wondering about your paycheck, you were wondering about a potential bonus you might get, you're probably watching the copper prices that might influence how the company does. Are we on the same page here? So when someone says that, they're probably looking at a ticker /HG. Not that they're trading that price per se or that product, but they're looking at what that commodity is doing that could influence the potential sales of the company and the earnings. Now, let's go to just real quick analyze. Now, the one bad thing about, let's say, commodities, the prices move all over the place. Okay, maybe a bad thing. Now, I'm going to go to analyze. We're going to go to fundamentals for just a moment. And if you take a look at this, now what we're going to see is kind of the two big pieces here. Those two big pieces, we're looking at the sales and we're looking at the earnings. Let's start here just real quick. So when we look at 21 to 25, now I want you to think about this in terms of your own life. Think about your own balance sheet, okay? When I say balance sheet, think about your assets, your liabilities, but the biggest thing, your equity. Well, what do you want to see your equity do over time? Yeah, I think you'd probably say, James, I know the answer. I want it to rise over time. Now, the also other thing, if you looked at your income statement over time, you would like your income statement, your income, to go up over time. And matter of fact, it kind of should over time because the prices over time are increasing typically. Now, what you're now going to see is they were soft in 22 and 23, but in the last, let's say 25, that's been pretty solid. If you want to see what it's been in the quarterly, we can click on that and it's going to show the quarterly. Now, if we look at the earnings per share, again, softer in 22 and 23. Now, notice when the sales went down, so did the earnings per share. Bounce back up in 24 as sales came back, bounce back to a brand new high in 25 as the sales came back. So what we're trying to link is, can the stock do better if the sales and earnings are better? Now, the other thing is some investors might be saying, I'd like to see what the dividends per share is. This is why we say sometimes that the dividend can vary, and it has varied. And you're going to see that that dividend, though, is still about $3 for the year, okay, per share. Now, what I'm going to do is I'm going to come back to this. Now, I don't care if we're talking about investing or we're talking about trading. I think a lot of investors will say, James, I'm trying to get in closer to support in an upward trend. Now, some of you might not be as familiar with this chart as what I showed you earlier. You're probably looking at more of the chart like this, which has a standard 30-day simple moving average, and the blue line really more like a 10-day exponential moving average. These are slower moving averages that try to track trend and momentum. All right. Now, if we're an investor and the investor is maybe profitable, it's probably happening because the price is above the moving averages. So the investor is trying to have positions where the price is above the moving averages and the fundamentals are trying to help push up the price. As the fundamentals actually increase, could investors be willing to pay more per share for the stock price? Now, what I'm going to do is on this chart is I'm going to right click on the chart. And now what I'm going to do is, let's say, buy custom with stop. Now, here's the deal. Not everything has to have a target on it. Now, by the way, can you be an investor and have a target? Of course you could, okay? But if we said, James, my goal here is I just want to get exposure to, let's say, a company that's in this space. I want to buy the shares, but I also do want to set a stop below where I'm not comfortable in owning the shares anymore, okay? Now, what would that price be for you? At what point would you say I'm not comfortable in owning those shares of stock anymore? Well, that usually goes back to where the investor sees support. Support in this case, if we said horizontally, probably right around 187.70 or so. If I took 187.70, 187.70 less 2%, it's going to give us a stop of 183.94. Now, if I went down to this 183.94, we're going to go ahead and actually type in 183.94 stop day GTC. Okay, so if the shares are purchased at that price or less, sell the stock if it goes down to that or lower. So the investor here in this case is saying, hey, look, I want to try to be invested, but I don't want to hold on if the stock is not doing what I want it to do. Okay, so now We're going to go ahead and go confirm and send. Now, does the investor have to buy 100 shares? No. Let's say the investor says, look, I'm comfortable in buying 25 shares. Well, if they buy 25 shares, they type it in there, right above those pool balls right there. We click on that red icon, and now what you're going to see is it syncs that to 25 shares. Now, the comment from Barbara Hicks, 819, says, always 2%. Nope. So when we talk about, let's say, a stock over $50, we do 2%. Support less 2% for the stock. If the stock is, let's say, 3%, $50 or less, then we show the example of giving 3%. So the difference is, what's the price point? Okay, over 50, 2%. Less than 50, 3%. Okay. Now what I'm going to go ahead and do is say, now remember what this is doing. Buy the shares if it's that price or less. That's why the limit of what you're willing to pay, and then the stock, sell at that price or less. Now, the one thing is, if we actually sent that order, confirm and send, you're now going to see there's the order. So what's nice is it doesn't necessarily have to be buying 100 shares. That's the first thing, okay? Now, I'm going to kind of hold that right there. Are there any questions? Now, the comment is, why are you trying to buy this at 205? So here's the thing is, why did it come up 205? Well, let me kind of show this. So I'm going to go back to that paper money account. And what I'm going to do in this case, I'm going to right click, buy custom with stop. This is exactly what we had before. And I'm going to look and see 183.94. So wherever I right click, okay, data GTC, wherever I right click, if I said, hey, just buy those 25 shares that we talked about, wherever I right click on the chart, if I type in 211, it's just saying buy at that price or lower. Now, yeah, for sure we can adjust it, but if I send this order, it's going to come up here limited at 211, but where did it get filled? 202.57. Why? Well, because when we look at, let's say, what the ask price is, you're going to see that it's lower than the limit. Now, the con about what I did is, if you have a spread bid ask that is, let's say, 30 cents wide, you're going to probably get filled closer to the ask price, okay? Not in between the bid and ask. Now, that's probably not always that wide if we said, hey, I'm looking at a stock like Apple that is trading maybe just pennies wide, okay? So feel free to kind of adjust that buy limit price. Sure. All right, now let's go back to any other questions we actually had. Now, let me kind of show just real quick a couple other stocks. Now, one of the stocks we said we're going to keep an eye on that was post the earnings was ON, okay? Now, remember, we pulled up SOX, right? SOX, the neighborhood. Now, you can almost think of this like real estate, right? With real estate, or you're buying a house, you might say, look, I'm interested in actually getting a nice neighborhood first, and then a home or a stock, a company. Now, one of the stocks in there that's actually done pretty well is actually ON. It actually held up post earnings, gapped up this morning. That is also one that we're going to keep an eye on, because when you look at a 3-year weekly chart, I know you looked at this. This is also something that has gone inside. If we said old support really being 64, the next level of resistance being $78. Now, I want to kind of show this on purpose, okay? A lot of times investors think, oh, I missed that one day. But if you're trying to really invest for a trend, it's never typically about the one day per se. There should be a couple opportunities in the trend if it's trending. Now, we could say a comment like, my gosh, I should have got in yesterday. Well, talked about yesterday, but let's say we didn't hear that. The biggest actually thing is, let's say the investor said, look, I want to buy now, but I don't want to buy a full position. I want to save some capital if it were to come back down a little bit closer to support. I don't care if you're a trader or investor, okay? I think everyone would say, I like to buy a little bit closer or lower to where I'm that support level, okay? Now, what I'm going to do is, let's say the investor says, look, I'm going to buy some here, but I'm going to try to also buy some if we come closer to support. And I'm going to try to invest, okay, the capital and see if I can't get on to push to the upside. Now, I'm going to right click on this chart. I'm showing you that again. Now, notice where my kind of line is. It's right at the current price. Right click, buy custom. And now, by the way, I want to show this because let's say the investor said, look, James, I don't set stops. How would we do that? Well, just buy. Now, if we buy, all it's going to come is it's just going to say buy plus 100. That's the default, which can be changed. If I come in and say, look, I am not comfortable buying 100, I just want to buy 25 shares, or let's go buy dollar amount, click on that right there, percent of the account, click on that, dollar amount, I want to invest 2,500 at the current price. If we say buy $2,500 worth of on at this price or less, confirm and send the order, it's 35 shares of stock, it gets filled. Now, what I'm going to do on this next order is if I said, hey, where am I trying to buy more of those shares, the investor might say, well, I'd like to buy those a little bit closer to where we were yesterday. Right click on the chart, buy. And now what the investor is, if they said, look, it defaults to 100, we'll change that. Buy those shares if we're a little bit closer to the support. If I added to that order and said buy another 25 shares, okay? Well, if we said buy another 25 shares or $2,500, you can show it both ways, $2,500, there it is. Now, let's kind of take a look at the fundamentals here for just a moment. Now, on this type of order, we're going to say limit GTC. So this is saying that the price goes to this or lower, buy more of it. This is also known as dollar cost averaging, which we've really been trying to focus on a lot as of lately. And if you notice that, it's now sitting right there. I think one of the biggest things that investors probably, we're impatient, okay? If it has if it's trending, if you think it's something that can appreciate in value, please do not think that one entry day was the whole trend, okay? You're probably going to take multiple shots on that trend to try to build a position over time. I know it would be so nice that every position was $100,000 each. You got to start somewhere. Now, when we actually look at just real quick on, and we look at, let's say, the fundamentals there, you're going to kind of look down and just real quick and kind of say, what do we see here? Now, I want to bring this up. So the numbers we see down the bottom, they're historical, okay? And if we look at, let's say, the numbers up at the top, and I'm not going to go into this, but if you said, James, the numbers you've been showing, they're historical, which, by the way, if we said quarterly, it's going to show the quarterly numbers here as of recently. But if you said, well, what are other ways to kind of see maybe what the future might potentially, what are some investors thinking? Well, that's where we get this information up top. And you're going to see that those are perspectives. It doesn't mean they're right, but they're giving an evaluation, okay? And we could actually see that information on the right-hand side where you could look at that. That doesn't mean it's going to happen, but certain companies give their viewpoint as far as what they think, where the company is, has been, and what might potentially be forecasted. And that's the key word, forecasted. It doesn't mean it's going to actually happen, okay? I just want to make mention of that. Now, yeah, being impatient, sometimes that could be the case. Now, I also want to bring up just real quick a couple of these other semis that some investors might keep their eyes on. Number one is AMAT. AMAT has earnings. It's had a moving average crossover as of lately, but what you're now going to kind of notice here in this case is it's kind of really close to breaking out. Now, I do want to make mention of some fundamental information that's also on this chart and then share with you this chart. So right in the very top of this page, it tells us what is the PE ratio, 35, okay? If we look at the dividend yield, okay, 0.55, not even 1%. If we're looking at a company that doesn't even pay probably a dividend greater than 1.5%, it's probably a growth stock, okay? I'll show you some differences. The other thing that can also be kind of tell us what is this growth, value, or income? If that payout ratio in this case is probably, let's just say, less than 25%, it is highly likely a growth stock. Okay? So now let me kind of show you a little difference. If I came in and said Walmart, well, what you're going to notice is Walmart does not have a high dividend yield, which is kind of interesting. But what you're going to see is they do pay out more of their earnings per share in the form of a dividend. What is absolutely crazy right now is that Walmart's PE is near 50. It's unbelievable. Okay. Now, if we've kind of brought up more typical, let's say Coca-Cola, you're going to see that this is kind of more your value income, more like a dividend yield of 2.5%, kind of more classic dividend yield, right? But the payout ratio, how much of their earnings per share do they pay out in the form of a dividend? Oh, 68%. So P ratio doesn't always tell us that whether it's really growth, value, or income. The higher the PE, it's probably more the growth, right? But the dividend yield and the payout ratio, those are really going to be really kind of tell you, is this really more income or value? Let me repeat this. If that dividend yield is not more than 1.5%, it is probably more of a growth name. If that payout ratio is less than 25%, it's more of a growth name. If I brought up another stock and actually said, well, hey, what about a stock like, let's go back to Apple for just a second. Dividend yield less than 1.5%. We said more growth. And does it pay out more than 25% of their earnings? No, only 13%. So when a company is not paying out that earnings per share in the form of a dividend to this stockholder, the company is keeping those earnings for themselves and trying to grow their balance sheet and their income, and maybe try to do some strategic asset purchases of financial assets, buying a share of other people's businesses, or buying other businesses entirely. Okay? So they're trying to actually grow themselves, not just line the wallet of the shareholder. I know that hurts our feelings, but hey, that's welcome to the truth. All right. Any other questions there? Now, let me show this last one just real quick, and I'll share this chart. What about a stock like PG? Well, PG, more than 1.5% on the dividend yield and the payout ratio of 61%. So this is going to be kind of more in your area of income and value. Income really being over, let's say, 1.5% dividend yield, okay? Income would really, in the current market environment, probably be over 2.5% dividend yield, but the payout way over 25%. When we look at something like this that has a PE ratio of kind of like, in that 20-ish category, number range, classic, lower price multiple. Now, the other one I want to kind of bring up just real quick is when you look at, let's say, Philip Morris, which we have been investing in, okay? We still own that. You're now going to see, if you take a look at this, it had a nice poke to the upside here today. Who was watching? PE is 24. Yield is 3.14. Payout ratio, 77%. Mother mia, okay? So the company here is saying, look, we have our business. We're just running it as usual. We have the revenue, we have the earnings per share, and we'll share that return with the investor. Hopefully, we'll also try to get investors who think the stock might be more valued based upon the revenue and earnings, and maybe what that dividend might be valued by those investors. Also think about its other twin cousin, really Altria. Philip Morris, Altria. Same thing, but maybe hasn't gone up as high. Are we starting to see a bouncy on this right-hand side? So this is, to me, like a litmus test. What's the dividend yield? 6.4. It's not growth. If we look at the PE ratio, we're not even at 20p. This is really more your classic, really value and income, okay? If you look at the PE, payout ratio, we're way above 25%. They're almost paying 80% of their earnings out in the form of a dividend, okay? Now, let me share with you this chart. If you said, James, I don't have that. I want that for myself. I can understand. That's why I want it too. And so what I'm going to go ahead and do is let me send that out to you. If I send that out to you, it's in the chat. And I'm going to go up to the very top right, go set up, open shared item. And now what you're going to see is I'm going to copy and paste. If I did that, preview, and then import that, this is being recorded. I'll share with you the link. And you're going to see that it pulls up right there. How do you open it up? Right there. Okay? How do you save it? Well, style, and then save style. And we can just call it the growth, value, income chart. Okay? Save. There it is. Where to go? Style, load style, and you're going to see that it's right in that list, right at the very top there. Okay? Now, a couple things I want to make sure that you have. Okay? So first off, if you actually said, hey, where would I actually go to see more classes? Okay? Now, number one is we're on YouTube. If you go to YouTube and just type in Trader Talk Schwab Coaching Webcast, we stream all of our classes on YouTube. So click on the link that I just sent you if you have not subscribed already. The second thing is if you said, hey, James, can I see other classes that have been taught in the previous weeks from this class that I didn't know about? Well, yeah. I mean, so last week we talked about value and income, areas of refuge from growth. So some of our examples are going to be kind of more growth focused, maybe trading. Some others are going to be more value and income, more investing. Okay. So also remember with what we discussed, you can also follow us on the Trader Talks. Subscribe. It's free. Also in the chat, there's a survey. Just 2 questions. Thank you in advance for filling that out. Thank you. Now, coming up next, we have our next session coming up right at the top of the hour. Join us, okay? And also remember with what we discussed, it was done for example, illustrative purposes only, as we talked about some of these growth, value, and income examples. Also remember with what we discussed, this was an example of some of the classes we teach. We teach on different topics for different reasons. And join us and subscribe to our YouTube page. Thanks so much. Stay tuned for our next webcast coming up next. Bye-bye.